The topic of today's conversation is Bank Customers Bill of Rights, the rights and obligations of customers in the age of digital banking. And to discuss this in more details with us is a guest who brings to the fore so many years of industry experience with domain knowledge in this specific area. I'll do a bit of introduction and then give an overview, right? So our guest for today is no other than Chinonye Nnaji. Chinonye Nnaji is a legal practitioner with banking and finance law expertise. She is the convener of the Law, Finance, and Economic Policy talk show, where she promotes economic policy conversations. By way of a background, Nigerians have complained about incessant violation of their rights as consumers or customers. But few demonstrate the patience to take up cases against defaulting companies. Data from the Consumer Protection Agency shows that operators in the banking sector specifically, and aviation and telecom sectors are the most regular offenders. As you do know, there has been massive development of online lending platforms in Nigeria, which has increased access and ease to financial services. Requirements to obtain loans from these online platforms are less daunting than from the traditional financial institutions. So this makes it a lot easier for customers to access finance through them. However, this influx has also brought with it some sharp practices, right, that violate consumer protection policies and rights that have become more pronounced in recent years, such as data protection and privacy, as well as fair lending and recovery practices. It has become the norm for lending platforms to require consumers to have access to their contract lists of this. And this frequently utilized to send disgraceful messages to the borrower's contacts upon the borrower's default. These platforms are also notorious for charging exorbitant interest rates as a trade-off for low documents and collateral thresholds. This trade-off is arguably not commensurate to the damage. The Federal Competition and Consumer Protection Commission, that's the regulator that is responsible or that has the mandate to regulate competition, antitrust, and ensure that consumer protection and promotion of consumer interest in Nigerian market, has taken it up and deemed it necessary to investigate and regulate online lending platforms that violate consumer privacy, fair lending terms, and ethical recovery practices. However, this has also brought in its wakes a whole lot of controversies, right? And to discuss all of this and even more, Chinonye Nnaji is going to provide insights, right, into some of this. So stay back Stay tuned and join us in this interesting conversation. So, Chineye, it's my pleasure at this point to invite you to the Regtech Africa Hangout.
Thank you so much. Good afternoon, everyone.
Great. And I would like to start by, so let's know a bit more about you.
Okay. So my name is Chineye Naji. I'm a legal practitioner, like you rightly said. Been practicing for a pretty long time now. I started off in the law firm circle, advising the CBN and other regulators, as well as many of our commercial banks on financial transactions. From there, I transitioned into one of our microfinance banks that's also a digital financial institution, and then now I work in a payments institution and also a digital bank. So this is something that has become very relevant, and it's also a topic that we're addressing at the Law, Finance and Economic Policy Talk Show, which is just an outlet with which I try to sensitize the public on financial policies in the Nigerian and African markets. So, like you rightly said, there's been a lot going on in the Nigerian ecosystem as it relates to digital financial services, and in the past year, specifically as it relates to digital lending platforms. So, yes, excited for us to go into this in more detail and dissect it.
Thank you very much. So having laid that foundation, I would like to start by asking, so how would you describe the digital banking space and the character of customers in Nigeria?
Okay, so I would say that the issue in Nigeria is very two-pronged. We have the issue from the regulator and also these institutions. So I think the challenge is when innovation meets traditional laws, when innovation meets traditional regulators. So what we've had is a very traditional banking sector, a very traditional and formal sector with the CBN and our commercial banks. And in the past couple of years, we've had ingenious innovations that are trying to improve financial inclusion. But the problem with technology and innovation and the law is that the law always has to catch up with innovation. So we have people that have found ways to scale through some of CBN's licensing regimes. So for example, we have digital lenders who would simply obtain a state money lender's license or a tier 1 microfinance bank license or some finance institution license, or not even a license at all. And like you said, with the economic situation and with the fact that getting credits or loans from traditional institutions is a very, very stressful process that requires multi-layered documentation, we found that these digital platforms that provide services and also provide lending are thriving, not just on the lending side. We have the likes of Kuda Bank who came forth and their mandate was that there will be no charges on holding accounts with them. So they brought a lot of innovations that the traditional sector was not able to provide. But like I said, their innovation has not been caught up by the regulators. The regulators have been very slow in responding to these issues. And then we now have the other issue, which is that we don't have a very stable credit system or database in Nigeria. So we have a situation where digital lenders may be adopting, or digital financial service providers may be adopting, unfair practices. But we also have the issue of unfair conduct from also customers as well. So, it's easy to obtain loans from multiple lending platforms because there's no form of database that registers if you've taken a loan from one platform or another platform. And then when it's time to repay, there are many ways to also avoid repayment obligations, or at the point where you're signing up, you might get notification that, oh yes, if you default, I'm going to send shameful messages to your contact or lock your phones. But because of the economic situation and the desperation at that point, you quickly agree to those terms. Those terms have also not been subject to any form of regulation by our regulators. So, the issue is just too prone. We need to address it from the regulatory perspective, but we also need to address it from the aspect of the customers as well, in the sense of sensitizing people on the importance of, being ethical users of these innovative products as well.
Okay, that's interesting. I mean, customer's perspective, I can only imagine the amount of awareness and education that has to go in there. Given that this is something that is pretty much, evolving, I can only figure out the change that would. So thank you for that insight. The bank customers' bill of rights, while agreeing that the customer is king, clearly iterates not only the rights of customers, but outlines their duties too. Based on your understanding of the customer's rights to privacy and confidentiality, while highlighting the customer's duty to protect instruments and information, who, in your opinion, should bear liabilities for unauthorized transactions?
It's only really in underdeveloped jurisdictions setting actions, financial systems, person that has the higher ability, the financial institutions. King. So I'll give example. If I have somebody who has maybe hacked the mandate will be on the other. My complaint is not valid. I'm as truth in the first instance. Nigerian system. Customers should not even be made to infringement of their rights. So if there are certain rights that have been put in consumer protection laws or bill of as consented to those rights or it doesn't mean that those rights can be taken away. So for will kill me, that doesn't mean that you're not liable, and that's what these platforms in their terms and conditions put in violations, things that are violations that will not stand before any law, and just because customers have consented to this, they go on to contradict those laws. I recently wrote a paper on this, and the amount of emails that I got from different very alarming, just seeking help and narrating the sort of repayment mechanisms that have been adopted on them, and you just see that there's a lot of work to be done. Financial institutions need to understand that they have the bargaining power. They are the ones in a position of power. They cannot infringe on rights just because sensitive customers or because customers who are under pressure have agreed to this. Yes. Yes, so I think that's my thoughts on that question.
Okay, brilliant. I also think that on the part of the regulators, right, there's still some bit of work to be done in that regards, because to a large extent, like you rightly noted, the financial institutions have the upper hand, and at every point in time, it appears as if the consumer is it's at the receiving end, right? So in terms of ensuring that the consumer is to a large extent also protected, right?
Yes.
I think there's a whole lot that the regulator also can do.
Not to say that the regulators are not trying. Recently, I think about in July, the CBN released some drafts of digital financial services awareness guidelines that are supposed to come into force after stakeholders have made comments on same, and it just addresses these issues of once again, what are the customers' rights, and especially in terms of when you're dealing with maybe customers that are not so educated, as we find a lot in our country, Nigeria. How are you able to explain terms and conditions to them? What information is available to them? What are also your practices? There's a holistic consumer protection framework that also deals a lot on your practices. What are your banking practices? What are your lending practices? But I think where our regulators even need to first come into play is to actually sit down and think about how we want to regulate digital financial service providers. How do we really want to regulate them? So we find that there's no specific regulation that caters for digital financial providers. What they have to do is to come under the existing regulations that we have. So you have most of them opting to go for like a microfinance bank license, a financial institution license, or just any form of license. Or when they don't even want to go through the scrutiny of the CBN, they just go for a state money lender's license. So there's even a challenge of even having them under one database, having them under one control. So like we know the state money lender's license, the CBN doesn't have purview over that. Those are regulated by individual states. So when you don't even have a means of regulating them, a means of bringing them under CBN's submission, then that's already where the first issue is. So what the CBN and the regulators need to first do is to, have a stakeholder engagement and determine how we want to regulate this institutions. Some of our neighboring countries have already done that. Kenya, for example, has a digital lenders framework. Other countries have digital financial service providers framework, so that you even have a way of regulating them. Because if you're making laws and they are not mandated by those laws, then there's already a problem to start with. So I think that's the first step. How do we get them regulated by the CBN?
Yeah, but given that the digital financial services in itself, right, in terms of from a regulatory perspective, right, cuts across both financial and in some cases the telecom regulation, right, yeah, or the regulator, and maybe other regulators, like in our case in Nigeria, for instance, right, you probably find at least a minimum of 3 regulators come into play: the central bank, the NCC, and maybe the Bureau of Data Protection or something like that, or NIDA, for instance, right? Getting all of these different regulators, right, coming together to agree on a single regulation that then governs it. How easy do you see that happening?
It's not difficult. We've been able to achieve this in some other areas. So, for example, when it comes to the USSD, which we all make use of to make payments on our phones, there's harmony between the CBN and the Communications Commission on that. So it will not be the first time that there's need to be harmony. Financial services are conducted through telephones every day. We also have the payment service bank licenses that telcos now obtain. So it won't be the first time that we've had regulators come together. I think where we have an issue in Nigeria is with consumer protection, where we have the Federal Competition and Consumer Protection Commission and the CBN. I say so because the Consumer Protection Commission is act when it was instituted in 2018. It stated that it was the sole consumer protection regulator in Nigeria above all industry regulators. But when we had the Bofia Amendment in 2020, that now came to say that the CBN is the as it relates to financial services, the CBN has superior authority over the FCCPC. So there's even that disparity. So even with FCCPC's interventions recently, there's been that lack of agreement as to whether the FCCPC has that authority to make those regulations. So I think that's more of where we have those issues. But if we take an example from the securities industry, the FCCPC and the Securities and Exchange Commission were able to come together to regulate mergers and to regulate other security transactions and come out with a framework. So my challenge is, why can't the FCCPC and the CBN sit down and do this as well? In terms of who should have supervening authority, my thoughts would be that it should remain the CBN. The CBN has in place a consumer protection unit. It has in place consumer protection frameworks that banks, payment institutions are subject to, and can easily be extended to these digital financial services regulators. So I think we magnify the problem when we say that there's a difficulty in them coming together. When FCCPC made these interventions recently, it had a joint task force that included the data protection regulator, the EFCC. It didn't particularly include the CBN. So a similar joint task force can be established by the CBN, where the different regulators come into play. You're right to say that there are many regulators that are involved. You have the Nigerian Communications Commission, you have the Data Protection Commission. So there are different areas that come into play, but the regulators can come together and harmonize on this like they've done in the past.
Okay, thank you for that insight as well. Regtech Africa followed the report. So following the feedback you just gave, we followed the recent story on the FCCPC investigation into the activities of some digital lenders for unethical practices and breach on consumer protection. Knowing your stance on the matter of consumer protection, especially as cited in your article, Consumer Protection Policy for Consumers of Digital Lenders, and your position in this particular issue, where you stated that FCCPC is acting beyond its regulatory powers, and that the CBN is the agency with the power to regulate payment processes. One might argue that the Commission is acting well within the rights to safeguard and advance the well-being of customers. How then, if at all, do you think the FCCPC should have intervened, or should they not have?
I would not say that they should not have. Where the CBN had failed to act, another regulator had come into take decisive action. So while I hold the opinion that the CBN should be at the forefront of these interventions, I also that the FCCPC was able to take immediate action. And this is just my opinion. There's still a lot of literature or arguments between lawyers and the industry as to who has the supervening authority. Because like I said, the act that empowers the FCCPC makes it the sole regulator. Then the act that empowers the CBN. So there's a lot of legal arguments in that aspect. But I do think that this FCCPC was able to come in time, taking down some of those platforms and also requiring them to register, to disclose their loan obligations, disclose fiscal address, disclose businesses that they're related to, also disclose the regulations or the licenses that they've procured. I think it was commendable. The issues were becoming quite alarming. So for the
This space was downloaded via spacesdown.com. Visit to download your spaces today.
FCCPC to do that, it was commendable. What I would have liked to see was more from the CBN, having the CBN come in the forefront of such interventions. I mean, even still after this, we haven't seen much statements from the CBN on the intervention or what plans that they have. Yes, they have their draft guidelines, but the average user or the average customer is not going to go and look for those draft guidelines. The average user wants to hear from the CBN on what it can do, on what avenues are available. So I do not. From a legal perspective, yes, I would say the FCCPC acted ultra vires, but as a customer and a citizen, I would say that what they did was commendable. They came out to take action where the CBN had failed to.
Thank you very much for that clarity. With cyber crimes and still related to data protection, some argue that fintechs have increasingly made the financial services sector vulnerable to cyber attacks and data theft. Yeah. It is understood that the biggest advantage to fintech companies and startups is that they are not burdened or held back by laws or regulations as banks. And so they make risky choices as they are less concerned with investing in defenses to combat fraud and data theft. Would you then say that fintech regulations need to be tighter? And if yes, To what extent should this be?
So this the question you've asked is a very heavy question. It's not, the answer is not straightforward, and I would say that even as a lawyer that practices in the space, I have different opinions at different seasons. So like I said, I work in a payments institution and also a digital bank. So for the payment side of things, the CBN has been able to craft very tight regulations, and without sharing too much details, these regulations have actually started to sort of stifle innovation in the payment sector, and is still contributing to the fact that payments is very broken and channels of payment are very broken, and there are too many regulations, there are multiple placeholders. So I do know that too much laws would stifle innovation. But this is me also asking the question that I don't have an answer to, which is financial services is very sensitive. It's a different thing from saying, oh, I'm dealing with technology or innovation and I'm an e-commerce platform where I sell goods and services. But when I'm talking about financial services, I'm dealing with people's source of livelihood. I'm dealing with the economy. So I struggle myself as a stakeholder in the industry as to where the fine line should be. But I think for new products that come into the market, the CBN's regulatory sandbox is a tool that is being very underutilized. So I feel like the CBN needs to pump more infrastructure into its sandbox, in the sense that when we have new innovations or new startups coming up, they can practice within the regulatory sandbox, and the CBN can monitor their products, monitor their offerings, monitor the algorithms, monitor the technology behind it, in order to ensure that they don't stifle innovation. At the same time, they are able to monitor risk. When it comes to the cyber security side of things, I would say that the CBN has done a good job in ensuring that fintechs are very compliant. There was a cybersecurity framework that was released earlier this year, and all financial institutions are mandated to comply by early next year, I believe January next year. The institution where I work in now commenced the auditing for the cybersecurity framework a few months ago, and I must say that it really stretched us. It is a very cumbersome process. It ensures very, very detailed monitoring tools are enforced by financial institutions. But to say that financial institutions take risk, yes, financial institutions would always, technology companies would always take risk. That is the reason why they were able to come along with innovations, because of the risk that they were able to take. But what you find with the CBN is that once you start to grow, once you start to deal with a certain amount of numbers, you have to be subject to those cybersecurity frameworks and everything. So I think the CBN is doing a good job. Sometimes as the person working in the company, you might feel very restricted by those laws. We often feel very restricted by the things that we can do because of those regulations. So, just not to ramble, I struggle myself in answering that question of where the balance should be between innovation and the law. I believe that our economy is in need for these innovative service functions. But at the same time, I know that when we're dealing with financial services, if there are no tight and stringent laws, things can get out of hand, just like we saw with the lending platforms.
Okay, great. That's and this trend is also to an extent similar to what we see elsewhere. In Kenya, I think there's been also similar issues around the digital lenders. In Ghana, I think we've also had similar stories around that. So is this a global, in quotes, a global phenomenon, or how do you really see this?
So the trend that I've noticed is that the issue when it comes to digital lenders is more profound in countries where there are limited credit options. So what I mean is that you have places like the US and the UK where the average person with low to medium income has access to a credit card. But when you look at countries like Nigeria, I think Kenya, Ghana, like you mentioned, even South Korea and Brazil, they faced a lot of issues when it comes to these platforms, because the average Nigerian doesn't have access to credit. Last I checked the statistics, only 2% of Nigerians have access to loans. Only 4% of small businesses have access to loans. So there's a lot of pressure on digital lending platforms to bridge our financing gaps. So I find that in countries where there's that pressure, that's where we find a lot of these abuses. Because first of all, we have people that are able to take, our customers are able to take loans with reduced obligations. And then when it comes to repayments becomes an issue because of the hardship that we're facing. At the same time, we have people that, because the space is not regulated, they can then take advantage of that to charge high interest rates. And because they know people are desperate, they put hidden costs, there's no cooling off period and things like that. So I find that it's actually a trend. The issues are a trend globally, but most especially in nations where there's too much pressure on the lending platforms. There's no other options. They cannot just easily go to the bank and access an overdraft, or go to the bank and access a credit card. So the first option that you think of now if you need an urgent 20k 50k is to go to those lending platforms. So that creates a huge dependency on them, and in turn abusive practices easily follow.
Thank you for that insight. Recall that customers' rights to redress. So that is an efficient complaint management system.
Yes.
Would you say banks are more effective than fintechs in this regard? The reason why I ask this is because many will prefer that whatever company they transact with maintain physical outlets, so brick and mortar, for instance.
Yes.
Especially around their location, where they can walk into when complaints laid via call centers or social media, for instance, are not properly addressed. Considering that 35.9% of Nigerians' population are financially excluded and 31% are non-literate. So that's why I ask, would you say banks are more effective than fintechs in this regard?
So like you said, what we're used to is at the brick and mortar institutions. So I easily know that if I have an issue with a Zenith bank, despite how maybe poor their customer service may be, I can easily walk into a branch, demand that I be listened to, even if I have to visit them repeatedly. So from that angle, I would say that yes, complaint mechanisms may be better where you have physical outlets, especially like you said, where most people, we have a huge population that are illiterate, we have a huge population that don't have access to the internet. So yes, it would always be preferable for those sorts of persons to go into physical outlets. But I would also say that beyond physical, okay, so there's some, how do I put this? There are some compromises that we have to make in terms of technology and in terms of ensuring that we're not stifling innovation. So if I have to mandate a digital provider to have physical outlets, then I'm already putting pressure on their finances. So I find that what I've seen during my own research is that in certain countries, that requirements for physical outlets, for example, comes into place when you are dealing with a certain threshold. So for example, if I'm valued at, let's say, 200 million naira, from that point I have to now establish a physical institution where people can go and complain or people can go and transact, just because of the volume that I am dealing with. But I think in the first instance, we have to also let these digital financial service providers thrive. One thing that the FCCPC was able to do was to, in its registration framework, that it did for digital lenders, it mandated that they provide physical addresses. These physical addresses might not be, as the banks that we have, but they at least will give people some credence that they are dealing with people that have a physical personality in the sense of it. So yes, I think that complaints procedures would always be better for traditional institutions. I mean, traditional institutions have developed over the past decades, so their complaints mechanisms would always be great. Will always be better, not great, because we know that their consumer interactions are often poor. But at least you know that you would be answered eventually. I think also commercial banks are also very wary of escalations to the CBN. There are frameworks in place where if you are not responded to within certain timelines, you can easily escalate to the CBN. Now, I think we can take example from the payment sector. So when I say payment sector, payment facilitators like the Flutterwave and the Paystack and the Team Apps and the likes in the industry, though they don't really have a physical presence, their complaints, they have very tight and stringent complaints or consumer interaction requirements. So for example, if I file a chargeback complaints with Flutterwave, they have 24 hours to respond to me. The CBN is able to monitor them closely, despite the fact that they might not have physical locations where individuals can go into. And then you can also complain through your banks, complain directly to the CBN. So perhaps we can try and adopt some sort of framework so we don't put pressure on the digital platforms to have to exercise or establish online presence. Another thing that the CBN, sorry, fiscal presence. Another thing that the CBN did with its draft regulation on digital financial services awareness was to mandate that industry stakeholders and participants find ways to ensure that there's sensitization for even those that don't have technology. So what sort of mechanisms are there? Is there a USSD code that I can type and then somebody calls me back? So even if I don't have internet, even if I don't really understand or read or write English, if I just dial that code, then can somebody call me back and address my complaints? So those sorts of things can also be adopted. Is there also interoperability between digital platforms and our physical banks? Because no matter how we see it, no matter how innovative digital platforms get, they cannot destroy the traditional institutions. They can only make the traditional institutions up their A game, but traditional institutions will be there until the end of time. We cannot get rid of them. So is there a way where there can also be interoperability, just like we have in the payment sector, where if I have a complaint, I can choose to complain to Flutterwave or complain to Zenith Bank about Flutterwave or complain to CBN about Flutterwave and Zenith Bank? So perhaps if we also introduce such mechanisms, these are different ways that we can solidify customer complaints. The CBN also mandating things like, okay, you have to respond to a customer within 24 hours. You have to make sure that you have also hotlines or telephone numbers where customers can call to complain. You have to make sure that if you're signing somebody up that is not literate, maybe you have somebody give them a call, or there's some form of visuals that they can listen to or watch that would help them understand what they're getting into. So these are the sorts of things that we can put into place. And I think the CBN's draft guidelines that it's published has things of this nature embedded in it.
Thank you. At this point, I think I would like just ask that for our audience, if you have any question regarding or relating to this conversation, kindly just drop your question in the via chat, and we'll pick it up from there. Okay. Now, as regards the challenges, right, being faced by the fintechs in basically achieving their mandates, right? The fintechs, as some would want to call them or see them, like they are child of necessity. They had coming to fill in certain gaps that the traditional financial institutions or the incumbents for over the years could not fill, right? And of course, in that process, they have also been faced, or they are being faced with some challenges. Would you want to talk a bit about some of the challenges that the fintechs actually face today?
Well, so the fintechs they're hanging by a thread. You know, I'm sure most of us would have heard news of different fintechs laying off. It's not just a Nigeria problem, it's a global problem. They're really hanging on for dear life. So I would say that most of the problems that these fintechs face are these same problems that we're talking about. You know, there's no regulatory coverage. It's almost as if it's a battle between them and the regulators. I think our regulators need to start to see like you said, people that are able to bring in gaps that the traditional sector is not equipped to bring in, and take lessons from there, as opposed to treating them as the enemy, which is what you really find. You find that when you're dealing maybe in CBN audits and things like that, you almost feel attacked. You almost feel as if the CBN is looking for how to ensure that these businesses are not are making mistakes so that they can easily cut them out. So I find that that's what a lot of fintechs are dealing with. A lot of fintechs are also dealing with high costs. Running a fintech has to do, the costs for fintechs are crazy. So for example, as a Nigerian payments processor, you need to have your Amazon Web Services. You need to subscribe to identity searching tools. You need to subscribe to fraud monitoring tools. And these tools are in hundreds and thousands of dollars. And bear in mind that commercial banks can do this because they hold money. They hold consumer money, and we all know that they use our money for investments. They use our money to give loans. So they have different sources of income. They have liquid cash. But when it comes to these other fintechs, most of them are restricted from holding funds. Payments processors, for example, are strictly restricted from holding funds. So they have to only deal with the 10 naira that they charge per transaction and things of that nature. And when you now have high costs like that, they're really dealing with liquidity issues. So those are the challenges. And also because this is a new space, fintechs are just navigating. They're just trying each day. They deal with a new challenge that no other fintech has faced the day before. So each day they're navigating. They're navigating their way into survival. So we find that our regulators are not investing enough in research, are not investing enough in ensuring that they don't collapse. We see more of the investments when it comes to the commercial banks. So for example, when it comes to commercial banks, there's the NDIC that ensures insurance of customer deposits and different interventions that could come into place for commercial banks. But when it comes to fintechs, it's just you are on your own. And we know that most of our fintechs are not even financed by Nigerian entities. They are financed by foreign investors. So sourcing for investors is also a challenge space because, like I said, running a fintech business has very high cost of operations. When we joke around and say, "Oh, tech bro money," you have to pay for talents, and sometimes these talents are important because we don't have that experience. That also increases the cost of running such fintechs. So they have high infrastructure costs. They have high service costs because they have to pay staff and all that. They also have to maintain their licenses. Then each also notes that because of how broken it is, because of the limitations, a payments company, for example, would have to rely on a bank. We have to rely on NIBs. We'll have to rely on probably banks in different countries as well, and each of these comes with its own costs. When you're dealing with your settlement bank or your acquiring bank, there's a cost. So these costs are really choking fintechs. It's something that you see firsthand on a daily basis. It's really not easy to thrive in the industry, and we would see that in the next couple of years there'll probably be mergers between different fintechs, or we have some fintechs shut down completely.
But this is quite I mean, it could. I mean, some would argue that it's surprising to know, because the general impression is that there's a lot of inflow that is being channeled towards, in terms of investment, right? Channeled towards the fintech, right? This year alone, Nigeria and indeed Africa has received a lot of foreign inflow into fintech investment. And some would think, I mean, by that measure, that it's quite a lucrative space to be in at this time. But hearing all you've said, it comes across as the opposite.
So yes, investments have trooped into Nigeria a lot. But then, when you have investments, you have obligations as well. So you have obligations to those investors. You have to break even. If you take a loan, just because you've taken a loan of 100 million doesn't mean that you've broken even. You have to make that money and make your returns to your investors. So while we've seen a lot of investments come in, if you also check the statistics, we've also seen that there's a lot of losses. So for example, Kuda has massive investments, Just let me know if I'm clear. I saw a comment that I was breaking.
No,
I
you're
don't know if
clear.
that is the case.
You're
Okay.
clear.
So we saw Kuda, for example, reporting massive losses for 2021. Who would have thought that Kuda, with all his promises, with all his investments, would be able to record losses? So those are the sort of numbers that we're starting to see in recent times. This is years after investments. So those are numbers that we're starting to see. These are things that we have to take particular care of. So, for example, we have one of our biggest payments processors, which is Paystack, and they've received investments from Stripe. But we've seen today and yesterday that Stripe has lived up 14% of his employees rather. So we can see the layoffs happening all over. I mean, there's also the Twitter discussion of the layoffs. There's layoffs that have been done by different cryptocurrency organizations across the world. So yes, investors trooped in to invest, especially in Africa, because of the opportunities that we have in our space. But what we're not seeing years down the line is that running a fintech company is crazy. So when the CBN made those requirements for commercial banks to have 25 million share capital and all that, they knew what they were doing. They were trying to secure and ensure stability. And stability is what we don't yet have in the fintech space and will take us years to achieve. So we need to find how to reduce costs. The foreign exchange doesn't help because, like I said, you are purchasing all these tools in dollars. You hardly find any of these tools where you are purchasing in dollars. A monthly Amazon web subscription can cost up to $200,000 for a big fintech in a month, and you're paying these fees in dollars. Meanwhile, you're earning in naira. So these are the sort of challenges that fintechs are facing. We had Kuda who tried to do transaction-free transfers and all that, but we saw the losses that they made. They also reported 69% of non-performing loans, which is those easy loans that it was given to the public. Now, 69% of them have not been paid off. Who is going to bear that loss? It's going to be the company and its investors. So those are the sort of things that we are seeing. We're seeing that trend. We're seeing the bubble that fintech says existed in, that, investor money is coming in. There's money coming into it. We're seeing those bubble. Most of those investments were seed investments, which obviously were given where the company was yet to be established. But as companies are being established, as we're seeing the difference, issues going on, that bubble is reducing. There's also been different issues because, like I said, most digital service providers also have to rely on commercial banks. So, for example, a payments processor would have to it has to keep all his money with a commercial bank. And we saw, for example, the issues that were being reported online that customers were losing money from banks like Zenith and Access. Those did not affect only customers, those affect also fintechs. Some fintechs also have issues where their funds cannot be traced because they run transactions by the second, and then when it's time for there to be settlement, and therefore there for everything to be settled, we find that sometimes there's disparity in the sums that are being reported by the bank and reported by the fintechs. And who would always win in this situation? It will be the banks. So yes, in summary, there's a lot of investment that is coming in and will probably still come in, but fintechs are also hanging for their dear life. They're running in debt, high costs. Running the business is very expensive.
So what does this portend for the future for fintechs in Nigeria? Is it all gloomy or?
It's not all gloomy. I think that the innovation is welcomed. So, for example, digital lending platforms that were complaining of all these issues. You can complain of all these issues because now you can take your phone, download an app, and get loans. That was not possible before. For you to get somebody to give you 100,000 naira, or you want to go to the bank, the requirements you'd have had to fill. So I don't think it's going to be all gloomy. What we'll just find is that, as opposed to having the hundreds and thousands of startups that are coming every day, we'll probably find that there'll be a lot of mergers. So we'll have small and big fintechs coming together to expand their markets to be more stable. And also, we really need our regulators and our government. We can't just be receiving investments from abroad. We need our government to take an interest. What are they doing in terms of ensuring stability? What are they doing in terms of ensuring reduced operation costs? What sort of tax breaks are they giving these fintechs? Most of these fintechs are carrying their parent companies abroad to Delaware, the UK, and Ireland, where tax incentives are favorable. So what sort of tax incentives are we giving these companies? So for example, when Flutterwave received these investments, the CBN went for it and started asking, oh, you received investment, you didn't do this, you didn't do that. And that's because they probably receive the investments from their parent company so that they don't have to deal with these same issues. So how can we solidify as a nation, from a government's perspective, from a regulator perspective, to ensure that we are also, giving them the breaks that they need? We are also ensuring that their tax breaks, giving them reduced taxes, giving them other incentives as well. So these are the sort of things. Are we reducing licensing costs for them? Are we giving them the help that they need? These are the sort of interventions that we can help. Are there insurance policies in place for them so that in case of a crisis, they can rely on it? These sort of helps are not available to the fintech industry. And if we can tidy up on this, then we'll continue to see its growth. However, the growth will be different. Like I said, we'll see more mergers and more collaborations between the different fintechs.
Okay, as we wrap up, um, what would be your if there's just that one thing that you would want the regulators to do differently, what would it be for the overall good of the industry?
I think for me, it's a mindset shift. That would just be the major thing. It's a mindset shift of the CBN understanding, or the different regulators understanding the industry that we are now. I must say they've done a good job. The CBN is built of different brilliant people. They understand the space. When it comes to payment processors and the likes, they've been able to also, they understand the issues at play. They understand how to navigate the issue. But one thing that they need to change is that mindset. Is the mindset, the awareness. Understand the CBN has different interventions, even in the agriculture sector, but the CBN doesn't have any intervention for fintechs. What sort of policies and intervention? CBN has a fund for agriculture. CBN recently established the Infrastructure Development Fund, worth trillions of naira for infrastructure projects. Yes, that's commendable, but your core focus as the CBN should be in the financial industry. So what sort of intervention and funds do you have for fintechs? There's the sandbox, which is commendable, but the sandbox hasn't taken much effect. How are you making an environment that fintechs can thrive in? I think there needs to be more discussions on that. We had different CBN committees come out to release different statements this year, and we didn't see much about how they want to solidify the fintech space. So this is something that they really need to sit into. How can the CBN intervene? How can they promote homegrown fintech organizations? So that would be my major thing.
Okay. Thank you very much, Chinoye. It's been a very insightful conversation. A whole lot has been shared here. A whole lot has been learnt as well. Thank you to all the participants for your contributions. Thank you for some of the questions and comments that's raised. Thank you also to our partners on this.